We're going to talk prop trading, which is always a topic of great interest and discussion for everybody.
Now, like I said, first, I agree with Nick. You're never going to pass a funding challenge every month. I've never seen anybody do that. But to take the other side of his point, if you know 4 out of 12 months I'm going to be profitable enough to get this thing done, how much money is it going to take invested in these funding challenges, these prop challenges? Is it then going to be, let's say, just use round numbers. Let's say it takes $20,000 because you fail a couple and you have to rebuy them, and let's say they're $1,000 each. Let's say it takes you, let's go even less, say $10,000 over the course of a year. Is having $100,000 of capital worth $10,000 of potential losses? To some people, it might be. Like, I'm not trading the same entry signals I was 2 years ago. In 2020 and 2021, breakouts were the thing. Breakouts have not been working for me, so I adapted. You have to adapt. If you don't, that's what I think makes getting funded hard, is when you're trying to put a square peg in a round hole, because markets have changed and you haven't, and that's where it gets tough.
What's the point? You have 100,000 for a month. You need to have 100,000 for years.
Right. And then you need to scale it. I would say you need to scale. 100,000 really isn't enough nowadays, to be honest. Like, if you get into trading, you don't get into trading just to trade a 6-figure account. Nobody's like, I think everyone has bigger goals than that.
In order to get the funded account, you have to get aggressive. In order to keep the funded account, you got to stay defensive. And in the perfect world, you got to just be even at all times, so that the level of aggression and defensiveness is the same in the funding phases and in the real phase, which is a Zen state that we all try to seek.
My edge, what I've worked so hard to sort of develop in my studies, my back testing, all that sort of stuff, I've found that after a long period of time, and kind of just analyzing my approach compared to prop firms, I realized it's not super aligned, because I need the market to make a decision that I can't make on my own.
Don't adapt your strategy to a prop firm. Find a prop firm that will be flexible to your strategy. And there are so many prop firms now. There's so many variations on the theme. There's so many offerings now that, believe me, they exist.
I knew of prop firms as long as I've been a trader, almost. Like, I even worked for one at a time. So they have been around for a long time, but it's been very hard to find reliable ones. Now it's gotten much different. Now, so many people have taken these challenges and so many people have passed. There's proof out there. There should be validation that they pay out.
If you're only trading hypothetical money, really what you're trading is the prop firm's money. Your loss is their gain is your loss. I don't know about you, but I don't want to go into partnership with somebody who wants me to lose, because they want you to take lots of challenges. They want to make it difficult for you. There's pushback on you.
Regret sucks. Like, you never want to regret things. Am I going to regret it more if I try and I get paid out and I make some money and then it does shut down and it comes down, like you're saying, but I made money along the way, like James? Or am I going to let him make all the money and I just am sitting here twiddling my thumbs, and like, in the future I could look back on that and say, I could have made some money there, So I think that's where it's like 51% I'm there, 49% I'm with Nick.
So I think the top 5 takeaways from Austin and Nick, if we're going to combine it, is no time limit if we can get it, right? The ability to hold over the weekend, which is really important for a lot of sort of longer term, maybe swing-based traders. The ability to trade a reasonable, 10% up, 5% down, reasonable drawdown, levels, nothing too tight. As a matter of fact, even wider than that would be better. And the ability to trade a wide variety of instruments, because some markets die out, other markets revive, and you want to be able to trade the active market, especially if you're trading prop. There's nothing worse than being in a dead market while you're trying to trade a prop account. And last, but very much not least, because I think people take it for granted because spreads have been so, in real environments, spreads have been just very, very good, is that you need to make sure that when you're actually trading on a prop account, the execution of spreads is the exact same as it would be in that real brokerage account. But most importantly also, what's the final thing you want to say to him? Take the money and run. Never leave the money in the house, right?